U.S. Stock Market Review. The U.S. stock market opened higher today than the previous session, but trading is also in a bearish correction. The S&P 500 is close to 3,700. The NASDAQ has broken the support level and continues to fall further below. Everything looks rather gloomy for the technical sector, but this drawdown provides many opportunities. NASDAQ Index. The tech index continues to fall, which means that many of the companies that have been favorites of late are now turning out to be outsiders as a result. The main driver of the decline in technology stocks is the growth of treasuries and market fears in this segment. Consider a number of tech giants that are frequently asked questions. Apple shares. I corrected a number of details on the graph, removed past developments, and here is the current picture. After the pin bar, which signified buying, a bearish reversal went and the stock price also went down. I think that the drawdown may well drag on to the next levels, which I noted on the chart, if the price does not hold on to the current positions. What needs to be done? Firstly, this fall for long-term people, of course, will first of all serve as your test. If you sell these shares that you have already bought right now, you will regret it very much. My colleague will soon make a detailed review of Apple, where the analysis will deal with all issues on a large scale, and so I will just recall a few facts about this company. The company's business does not depend on crisis factors at all. The pandemic has only accelerated the digitalization of the economy, which plays into the hands of Apple. The company is investing in new developments and is doing it just fine. Share buyback policy. Strong market position. These factors should already be enough to relax and just wait for this investment idea to work out. Many large investment funds are invested in Apple, and Buffett still holds the bulk of them. Yes, I understand that for the first time in the market, you are not used to seeing a drawdown, but this is your test of persistence. If, as an investor, you are twitching, nervous, then you are not mentally ready to work with the markets. Facebook shares. The situation is almost the same. Facebook shares have been trading near support levels for 10 days. If the negative on the markets continues, and in general it goes further on the index, then we can see Facebook even lower. Anyway, if you already own Facebook shares, then it's best to stop and wait for the shares to fall further. In the future, new purchases should be made at the next level. The appropriate strategy here is buy and hold. With such companies, when they fall, you should not panic and make sudden movements. This will only make things worse. Companies like Facebook have practically no competitors, and they just buy and absorb all other competitors. Google shares. Well, Google was the luckiest one. Many cling to it. If you are still worried about sudden market movements, then you might consider Google as a passive investment. Yes, they do not pay dividends, but they have a completely different policy, and in my opinion it is much better. Tech companies prefer to pay either modest dividends or not pay them at all, as they are determined to reinvest profits in new developments. Also, do not forget about the new partnerships between Google and Intel and the future plans of this company, which will ensure the growth of their shares. Review of commodity markets. We continue to track commodity assets and continue to keep you informed of all current events. We also share our thoughts on the market. We continue to monitor gold, oil and other assets. Gold. Gold has reached the bottom of the trend line and continues to test it. If the signal is inconclusive, then I expect further decline towards the support level, which is marked on the chart. So far, the most profitable strategy for gold in the short term is an intraday short. By the way, now let's try to clarify the situation on the lower charts in more detail. Whether we will fall further or not. On the 4 hours chart, there is an accumulation of candles near the line, but there are no confident signals for a rebound or a breakout. Let's try to look even lower. There is something on the hourly chart that can be phrased as a double top, but there is no precise outline. The vertices are equal to each other, and there are a lot of shadows in both directions. It is impossible to say anything precise here. So far, we remain in the observation that for the short term, that for the long term. Oil Brent. The reversal signal was rather weak from a technical point of view, but the news from OPEC gave a huge boost to oil prices. If you took a chance here, you may soon see the figure of $70 per barrel. This indicator also needs to be borne in mind for the ruble. With such a high oil price, a strong depreciation of the ruble will not be on the horizon, and therefore now is the time in good times for the ruble to replenish dollars in reserves, if you work mainly with foreign, Western stock markets. For oil, short-term long-term signals are now relevant and prices may even fly above $70 per barrel. So far, though everything has been tense, our recommendations have turned out to be a plus. Platinum. Platinum also got to the point where I indicated. The only thing that worries me very much is the shape of the previous candles, because with such a confident bearish trend, a breakout of the level is possible. I strongly advise against trying to trade a breakout and is best attuned to the possibility of a pullback. This is where bullish engulfing is best. The pin bar at this level will seem weak, because the bearish trend higher can ignore this signal and knock down the stop loss. But it would not be very wise to refuse to enter the pin bar either. I am still silent about the fact that there may be no signal at all. At the moment, we are waiting for a further reaction. Entry only on pin bar, bullish engulfing. Other signals are not worth the risk. If the price shows a long candlestick with a shadow piercing the level, then allocate less risk for a trade with a stop placed below this shadow. In a bullish engulfing, stop behind the engulfing candlestick.